Yan, so today we'll be learning about the working capital and liquidity. And we have a set of questions here from accountingcoach.com. Yan, hanggang number 25 tayo. So let us start answering. Working capital is the same as or the different from net working capital. The answer here is, we have answers here. Let us erase this. The answer is the same as. Okay. So what is working capital in the first place? Working capital represents the ability of a company to pay its maturing debt at the moment in time. Yan. It is the liquidity of the company. So here, the working capital are one of the financial ratios. Diba? We have many here. Working capital, current ratio, diba? Quick ratio, diba? Or bad debt equity ratio. Bad debt equity ratio, debt to equity ratio, diba? Return on net income, and these financial ratios are used in management accounting but to make better decisions for internal purposes. Yan, pag nag-manage ng business, mahalaga to. So number 2, the amounts needed to compute a company's working capital come from which of the following financial statements? Working capital is current liability, also the current asset. So it is a balance sheet. Okay. Here, the balance sheet. Yan. Number 3, the operating cycle for most companies will have a shorter than 1 year. So what is a operating cycle, diba? Ito yung kabubuan ng time na bumili tayo ng inventory hanggang sa nakastock siya sa warehouse natin or sa store at hanggang sa bili ng customer at babayaran niya ng customer yung full amount ng utang. Yan. So 3 components siya. Pag pinag-add ng lahat, madalas siya shorter than 1 year. And number 4, in what order will a company's current assets appear on a classified balance sheet? It would be by its order of liquidity. And what do we mean by liquidity? Again, it is the ability to be realized into cash. So makita natin sa balance sheet, diba? This was in the earlier videos, na una yung cash, sunod AR, sunod inventory, sunod prepaid. Makikita natin na yung pinakahuli yung mga long-term assets. Diba? Lalo na yung land, sa huli na yun. And let's go back here, number 5. Is it true or false that the current liabilities are listed on a company's balance sheet in order in which they have to be paid? This is false. Diba? Tingnan natin yung example natin na balance sheet. Sa current liabilities, diba? Hindi naman siya, more on, nakain siya more on the value. Diba? Nakita natin 200,000, 192, 42, 43. So, descending order. But also take note that it is divided into 2, current and non-current. And let's go back to where do we left? Number 6. If a company has current assets of 2, 3, and current liabilities of 100, the amount of its working capital, here, we would minus this to find the difference of 1, 3. Correct? And finding naman, number 7 is the current ratio. We divide the 2 amounts. So we derive into 2.3. And correct. So number 8, how will the total amount of a company's working capital change with the 100,000 account receivable be collected? So assume here in the early example na nabawasan daw ng 100,000. Yun, yung accounts receivable, because this is the journal entry. Nabawasan tayo ng cash. Pero nagdagdagan ng cash. So, the total amount would be the same. Number 9. Number 8. How will the total amount of company's working capital change when... Okay, it would remain the same. Number 9. How will the total amount of company's working capital change when the company pays 8,000 of its accounts payable? So if the company pays, from the early example here, yung 2, 3 nabawasan daw ng 8,000 kasi nabawasan ng cash. So matitira sa atin ay 222. Samantalang dito sa liabilities, nabawasan din ng 88,000, naging 92. So ano nagbago? Tumaas from 2.3, tumaas ang 2.4 ang ating working capital. This is means the same 2.3. However, sa working capital, hindi magbabago. Makita natin na yung 1.3, parehas lang siya. Pero yung current ratio, nagtumaas. So, number 9, yung working capital would remain the same. And now, number 10, how will a company's liquidity change when some of its products are sold from inventory? So, the liquidity increases because the products are illiquid than cash. Number 11, which of the following amounts will be used in both the calculation of the current ratio and the quick ratio? So, ano ba yung formula ulit ng quick ratio? It is the same with the current ratio. However, we only take note of the cash and the AR. So, here we both still take note of the current liabilities. Number 12, which of the following is another name for quick ratio? It is the acid test ratio. Yan. You can see that in a current, we take of the cash, AR, inventory, and prepaid divided by the current liability. However, in quick, we add the cash and AR and divide to the current liability. So we are missing inventory and prepaid. Number 13, a company has current assets of 40,000. Yan. An AR of 80,000. An inventory of 60. And its current liabilities of 1.2. So the company's quick ratio is, yan, we don't include the 60. So we derive from 1. 1.2 divided by 1.2 equals 1. Number 14, during the recent year, company's accounts receivable had an average balance of 60. Diba? And its sales on credit was 540. So how much was the company's receivable turnover ratio? Receivable turnover ratio, we divide the two amounts. Yun, makita natin na 9 yung kalalabasan. And dito sa number 15, during the year, the company's AR was 13. So, the average amount, outstanding siya, i-divide natin ito sa 365 days. And so, dividing this into 365, we get 28 days. So, ano ibig sabihin ng 28 days? So, 28 days bago pa makolekta yung full amount ng utang sa customers. So, pwede natin ito gamitin in setting aside, the correct term is in setting the credit terms. For example, hanggang 30 days lang yung maximum na tatanggap tayo ng utang from customers o ganun. Since 28, pwede 28 or ano ba, 25? Okay. Number 15, during a recent year, company's accounts receivable turn, okay, we have computed for this. The answer is 28. In number 16, during a recent year, company's inventory balance averaged 100,000. Its sales was 500 and its COGS was 400. And COGS is cost of goods sold. The company's inventory turnover ratio is, yan. So we divide this. 400 divided by 100, we derive into 4. And 17, we divide the 4 from 360. Resulting to 90 days. So, ano ibig sabihin nun? So, it implies that it takes 91 days for the inventory to be sold to the customer. Diba? Ito is 28 days bago makolekta yung utang. Ito naman, 28 days bago mabenta from the stock from the warehouse. Diba? So, pwede natin to gamitin, diba, to estimate na spoil na ba yung product natin bago mabenta kasi 90 days pa. And so pag mga mga prutas o mga gano'n, dapat mabilis yung pagbenta kasi baka mabulok. And pero pag mga benta natin yung mga non-living thing, for example, mga pillow, and so okay lang na kahit mataas-taas yung average days outstanding natin kasi hindi naman siya nabubulok. And so number 18, which is a better indicator of a company's liquidity? Quick ratio. Number 19, which of the following will indicate a specific amounts of receivable that have not been collected? It is the aging of accounts receivable. So what is an example of an aging accounts receivable here? And so may mga amount tayo ng AR or accounts receivable at corresponding percentage that the accountant estimates that it will not be collected. So makita natin na habang patagal ng patagal, yan, 90 days na, ay hindi natin siya makokolekta ng 20%. So by dividing this and adding these values, we get the total amount of bad debt expense, which is added to the allowance for doubtful accounts. So aging of accounts receivable. Okay, we have typed it. Number 19. Number 20, which of the following uses the amounts for more than one financial statement? Here it is the inventory turnover ratio. Why? Because we compute for the average inventory. Here, in our earlier example, na yung COG, yung inventory turnover ratio, ginamit bago mahanap to, hinanap muna natin yung cost of goods sold, tapos din-divide sa average inventory, hindi sa beginning or sa ending. Average siya. Similar dito, average accounts receivable, average inventory. So number 21, the company received a 5,000 invoice for consulting services it have received. The company chooses to use its business credit card instead of paying cash. Under the accrual method of accounting, would the use of credit card result in the company having more working capital? It would be yes. And since that we are increasing liabilities. And number 22, the section of the statement of cash flows that shows the adjustments to most of the company's working capital accounts is the cash from operating activities. And number 23, does the amount in parentheses in the statement of cash flows indicate that the amount described was favorable, unfavorable? It is unfavorable. Yan, di ba pag accounting, madalas pag unfavorable, madalas minus siya or negative amount. And so number 24, a company's account receivable increased by 23,000 during the year. So the positive or negative amount the same to cash flow. Accounts receivable increase. And so pag general entries natin yan, accounts receivable of 23 partnered by cash of 23. And so it is a negative amount since cash is going out. And last number, if a company's accounts payable is decreased by 6,000, so we debit accounts payable since it is going out, and the corresponding credit is a cash of 16,000. So again, it is a negative amount. And so this ends our lecture here, and I hope that you have learned a lot. And stay tuned, and God bless everyone.